All right, traders. Happy Thursday to you. Welcome back to the room. How is everyone doing today? Oh, that dollar Canada is rolling, George. Rolling. I took a look at it this morning. I didn't do too much top-down analysis because I knew we had the bank rates coming out and the monetary policy from the pound. So I figured that would just kind of make things interesting in the market. So I figured I was actually supposed to be doing my top down analysis live with you guys in the room, but I still been sneaking in early doing it and then coming back to the live room. But I did glance at the dollar Canada, and man, it's rolling. But welcome, guys. So we're past the busy week, the busy part of our week. We had 3 days in a row full of news. The last coming out, I guess we have Carney speaking a little bit later today at 4 p.m., which is an odd time, but the last coming out this morning. So it'll be interesting to see what the markets have in store. But I want to start off, we do have some news with Philly Fed and ADP coming out for Canada and unemployment claims for the dollar. That's not too much major news, but wanted to start off by picking your mind on something because I just got a very interesting question or comment on the Twitter. Right, so there's a hashtag this morning called "Lies Your Parents Told You." And real quick, before I get into mine, what are some lies that your parents may have told you? George says that drugs are bad. Drugs are awesome. But any lies that your parents have told you that you're now looking at and you're like, wait a minute. Santa Claus, Father, what do they call him in the UK? Father Christmas. That was, we were over there like, oh, are you taking him to see Father Christmas? I'm like, who the heck is Father Christmas? Santa Claus, America. Avery said that making money is hard. Ooh, so Avery saying making money is easy. Save money, don't take risk. All right, so school was needed to be successful, and we did a nice conversation here the other day on school. Work hard, make money, tooth fairy, school. Yeah. So that was the one I used this morning. I said, go to college and you'll get a good job. Hashtag lies your parents told you. And I said a little bit about how I graduated right into the recession and there was nothing available. I went to grad school to buy some time. And then when I got out of grad school, I was in an interesting position where I was underqualified for every career type of job because I had zero experience. Yet I was overqualified because I had a master's degree, right? It was a trap. Now, you guys know that my main reason for going to grad school was, again, just to buy time. I was tired of telling friends and family or getting the question, hey, so what are you doing? And I'm like, yeah, and it was weird. It was, and I never understood that, George. I went around, right? And I was like, okay, well, you're saying I don't have enough experience for this job. Right? This is kind of like an entry-level job. How am I supposed to get experience if you don't hire me? Like, that's what was going through my mind. Like, I need to get in the door. How can I get in the door and gain this valuable experience if no one hires me in the first place? How can an entry-level position say you need experience? It didn't make sense. And then what the real problem was, because that was the excuse, the real problem was Avery said internships. Yeah, well, I'm out of school. I'm out of school already. I did my internships for those careers. I wasn't doing free internships. I mean, you could. I think that's a really good path to do. Not necessarily when you're out of college, unless it's like your dream job. But I did my internships during college, and I told you guys a story I turned down. I did get a job offer after an internship, and I turned it down. But it was I didn't have enough experience for an entry level job, which is weird. But the main reason was that I also had a master's degree. So because I had a master's degree, you get put into a different category where they say, oh man, we're gonna have to pay him more. And nobody wants to pay you more. So it was interesting. But I got a response to I gotta, and real quick before we get into the response, just to follow up on internships, right? So I always thought this. Well, my believer is that school should be 2 years instead of 4 years, and your last 2 years should be simply interning. Now, I know many schools, my graduate studies required internships, not my undergrad. I do think that's the best way. It's the best for both the company and yourself, right? The company gets free labor. They get free labor. They don't have to waste money training you. And if you are a good employee, a good prospect, right? They can just implement you right into their system that you're already familiar with. They save money on training costs, and it works out, right? Best for the company. It's very similar to like people doing tryouts for like a team, where it's like, hey, come out on the team, you try out for free, and then we'll pick the best of the best and we'll go with it. I think it's great, and I think for the employee, it's good because it gives them experience in the field. It gives them a chance to prove themselves. It gives them a chance to kind of earn that job placement. So yeah, I'm a big fan of internships. I think the first 2 years of college should be spent on teaching you whatever you need to be taught. Again, unless you're in like a specialized field, like a scientist, or you're doing fancy stuff. But the last 2 years, you should just bounce around for different internships within your field. It should be like, hey, spend a semester for your last 2 years to do 4 internships. You can kind of get a sense of the different things you can do within your major. It gives you experience. It gives you a chance to kind of put yourself out there to the company, and it helps set you up to get a better job. I think that would make sense. But yeah, it makes too much sense, Adele. But I got the response here just seconds ago on Twitter, and it said, another lie, right, is do what you love and the money will follow. These ideas are from a different time. In today's rapidly advancing world, one needs to be diversified in skill and have a technique of living that is adaptive and creative. Always have a backup plan, never go all in. And I would love to hear your thoughts on that. And this isn't like a troll or anything like that. It's a regular follower, guys. Someone that I've spoken to plenty of times, I think. It's not a regular follower, but sometimes I've had good conversations with this person on Twitter. So no one's trolling. No one is trolling. Ale says, I love surfing. I don't get paid for it. Lash said, well, speaking as someone with no backup plan, negative. George says, not all things that you love can make money. Taylor says, I disagree, George. George says, never put all your eggs in one basket. So we're kind of split here. Some of you guys are agreeing with it. Some of you guys are not agreeing with it. And I disagree with the statement. Now, I get the point. I understand the point. And it's probably really maybe it's the words that are used, right? So do what you love and the money will follow, right? Now, I think that's false, right? I don't think the money follows anything, right? I wish I could just walk down the street and bags of money would follow me, right? Life would be a lot easier. But I do believe, especially in this day and age, right? Anything could be made into a business. I was just having a conversation with my business partner, my good friend, real estate agent. Came down yesterday to drop off some paperwork and, of course, bills that I need to pay. Hey, I got this mail for you. It's due tomorrow. Okay. It wasn't like that, but, and I had to give him some checks and whatnot. But we were just talking about the difference in times and how anything could be made into a job. His son just his son's going into film and whatnot. He just passed his audition to get accepted to this school, which was pretty cool. And we're just talking about how easy it is he doesn't really have a lot of experience. I said, well, these days, man, you got a cell phone and you can make your own short film with a cell phone these days. So it's easy to get that experience compared to the other days. So I don't believe money can follow, but I believe you can do what you love and you can make a business out of anything. I mean, I challenge you to give me something, give me a hobby that you love that can't be made into a business. Right? Someone mentioned surfing earlier. Surf instructor. Boom. You get to do what you love. You get to surf and you get to teach people how to surf and you make money from it. Reading. Well, guess what you can do? You could be someone that records the vocals for audiobooks. There you go. You get to read stories and you get to record it. Boom. Keep going. Come on. What else? In these days, anything, man. Shoot, you know what you can do? Whoever Avery said reading, right? I'm sure there's some lazy parents out there that don't like reading to their kids. So you can probably start a YouTube channel reading children's books. And I guarantee there are some lazy parents that instead of reading to their kids at night, would just put on your YouTube channel and have you read to them. Right? Or you can set up a thing at the library where you read children books and maybe you act it out. My kid goes to that where people come in, they read books as a group in the library, and it's like, they make it a little bit fun. What else? Anything, any passion could be monetized these days. Anything. Again, look at the kids on TV or on YouTube. They do unwrapping of toys. Like unboxing of stuff. That is a career now. Unboxing. Right? When I have a question about what I recently got, a new chair or a new phone, I go to YouTube and there's Samsung Galaxy 10 unboxing. Where they're literally just taking it out of the box and telling me about it. Anything could be made. Look at these little kids that are doing toy reviews. They just play with toys. Again, the guy Ryan's Toy Review making I don't know how many million a year off his YouTube channel. Ridiculous. Any passion of yours these days could be made into a business. Now, the money just doesn't follow. It doesn't just come. You have to do it the smart way. I don't know all the details of this guy, Ryan. I just, I know my kid watches him, and I know my wife told me that the numbers came out and how much million he's making. But the difference between him and, say, another failing toy reviewer on YouTube is this, right? So this guy started off doing toy reviews. Then they started off doing all these other challenges to get the kids involved in entertainment stuff and whatnot. And then they started creating their own, basically, cartoon figures. Then they started selling his likeness in stores where you can buy dolls and action figures. Then he put it into a video game, right? So they're expanding. They're really growing it like a business. That's the difference. They're not just taking a passion and going with it. They're building it into a business. Al says, Akil, if my passion was to just chill, how would I do making money off of that? Open up a lounge. Open up a relaxation lounge where people can come in and just chill after a hard day of work. You can sit there and chill with them. There you go. Be a couch tester for all I care. Test couches. Right? Create couch reviews. Right? You can start an affiliate program where these companies send you couches and you test them by sitting on there and chilling and watching TV and then creating reviews about the comfort level of the couch that you sat on. Sounds ridiculous, but I guarantee that's something that can make money. I guarantee people are out there looking for couches and chairs. And instead of going to the store and sitting on them by themselves, they're watching people do reviews. Anything you can think of. Anything you can think of can become a job. So I do believe that, you can do what you love. And again, the money won't follow, but you can go get it. And then the last one is, and let me know how you feel about this. In today's rapidly advancing world, one needs to be diversified in skill and have a technique that is living, that is adaptive and creative. Always, this last statement is what I want your opinion on. Always have a backup plan. Never go all in. You can reference to, what was the Will Smith quote? I don't have a plan B because it takes energy away from thinking about plan A, whatever he said. Now, I think it depends on how literal you want to take this statement. Um, you should always plan, obviously. You should always plan. There should always be safety measures, right? My famous story is, oh, Akil, he quit all these jobs and went into trading. And it makes it seem like, oh, I didn't have a plan. No, I had a plan. I didn't just wake up and quit my jobs. I thought about it for a while. I weighed the pros and the cons. I had money set aside. So I don't know if you want to call that a plan B, but it was a safety net. It was in case this doesn't work, I'm not going to be homeless. But I do think you have to go all in as far as when you see something you want, you attack it, right? When a lion is stalking its prey and it gets within range, does it kind of just prance up and try to go for the kill? Does it go, okay, come in to bite your neck and eat ya? Hell no, right? It charges full steam, full bore. Doesn't always get it, but it charges full bore. You go all in. And I think the mindset of not going all in is why people are stuck in that comfort zone. Maybe it's the athlete in me, and relating it back to sports. But if you don't go all in on a play, you're done. You're not going to get the results you want, right? If you're a world-class sprinter and you don't go all in the first 30 meters of your race, you're not going to win. If you're a wide receiver, you don't go all in on running your route, you're not going to be in the right place to catch the ball. If you're a soccer player, you don't go all in like Weston McKennie the other day, getting back on defense, making an 80-yard run. The other team may score on you. You have to go all in. If it's something you care, if it's something you really want to do, right? If you're not going all in, what's the point? George says, yeah, but if you're a quarterback, then you have option 1 and option 2. But that's a different story. That's a completely different argument. An argument that would make sense is, right, you have a wide receiver coming across on a slant, and instead of drilling the ball and going all in on that throw, because that's once the decision is made, right? Once the decision has been made on which wide receiver to throw it to, you're going all in that throw, right? Throwing a bullet at him versus kind of like a halfway throw that gets intercepted. So think about it more in that sense. And you've seen quarterbacks do that where they're kind of like, I don't know if I should throw this, and they're hesitant, and it comes out lame duckish. You get an interception. So it's all in once you've made the decision. So it's a different argument, right? The argument that you're making with option 1 and option 2 is deciding on what to do. That's before going all in. That's the decision whether it's like, hey, should I pursue this thing or should I not pursue this thing? Well, if I pursue option 1, that means I got to sacrifice this and this and this. But if I pursue option 2, I don't have to do this and this and this. I don't know what to do. And then after you think about it, or going back to the football reference, you're back in the pocket and you see why option 1 open. You're like, okay, I'm going with option 1. Boom. That's when you go all in. And that's what we're talking about, where it's like, again, the plan B, backup plan, it's there. There are always options. You don't have to do anything. And you should always think about your options. You should weigh them, the pros and the cons, before you make a decision. But once you make that decision, then you have to fully commit to it. Because if you don't fully commit, what's the point? You're just going to fail. You're just going to fail. And I think many people, I think they use the backup plan as an excuse. And it's really those that are stuck within that comfort bubble. The backup plan is keeping a foot in that comfort zone. Is saying to themselves, why I can fail, be okay. And again, although you want to put your position where you can fail at doing something and it shouldn't be the end of the world, right? If you don't make it at trading, you shouldn't end up homeless and jobless. Right? Again, you need to be smart about it, but you should attack trading like it's your last breath. Like, I have to be successful with this or it's over for me. That's the mindset that you need to be successful. You have to jump out of that comfort zone and just go all in. Think of it like any Hunger Game fans here? Right, same thing. When they come out the thing in Hunger Games, and they have what was it, the big cache of weapons in the middle, and it's like ready, set, go, and you have to make a decision right away. All right, am I going to run and try and get these weapons, or am I going to run the other way? And we saw what happened to people that made the wrong decision. They got killed. But it's I think that's the mindset. I think, and again, it depends. You can never always tell with people how they're writing, what they really mean versus talking to people. And that's another issue in this age of social media and lack of just social interaction. But I thought it was a good conversation, because I do think you can make money off your passion. And if you don't think that, I want you guys to read the book. What is it now called? To read the book called Crushing It. Has anyone read that book? By Gary Vaynerchuk, right? Crushing It. It's the follow up to a book called Crush It. A book called Crush It. And these are excellent books. I definitely recommend them. The book called Crush It originally talked about, this was before kind of like social media took off, and he was making predictions on like, hey, in this new age of social media and Facebook, and I think this was before Instagram, you can do what you want. You can make anything into a business. And he was encouraging people to do that. In the book Crushing It, it was basically a follow-up on there, where he kind of updated it for 2000. I think it came out 2018 or 17. Updated it for 2017, but also shared stories with people of people that really took the first book to heart and made a career off of it. And there's all types of stories. There's a guy he made a career off of opening up objects on the internet, right? He cuts open watermelons and baseballs and stuff like that. There is an older couple that were old and they wanted to renew their love of dancing, and they started making like a reality series on them getting back into shape and becoming dancers, right? All types of weird stuff. I'm trying to think of it's been a while since I read it. I'm trying to think of any other stories in here that were unique. It was podcast, Instagram, vocal first, the path is all yours, all types of stuff. T-shirt makers. It's a great book. But if you're not under the belief that you can follow your passion and do what you love and turn it into a business, you need to read that book. You need to read that book. Keith said that's an issue. The 9-to-5 job is comfortable. If you want something, you're working on your passion outside of those hours and probably thinking about it while it's a 9-to-5 job. Seeding the crop until it grows enough that you can leave the 9-to-5. Yeah. Yeah. And if you're, and what made me finally make the jump in my trading was I was at my, well, weren't 9-to-5s, but there were 3 jobs that were basically going from 8 to 12. And the whole time, or the majority of the time, I was thinking about trading. I'm sitting in the schools like, I wonder what the Aussie dollar is doing. And it hit me that, man, I love this stuff. I love this stuff. I'd much rather be at home watching the chart than, sneaking away on a bathroom break to check quotes on the phone. But it's I was making $30,000 a year. Which was a lot of money coming out of college for me, more money than I ever saw. And it was comfortable. I'm a very frugal person, as you can imagine. It was very comfortable. And it was hard to leave that comfort of a secure life, a secure check. It's hard to take that risk. And many people will use that backup plan or don't go all in, diversify, right? As an excuse, right? Do you understand diversification is a safety mechanism, right? Here's a question for you, right? And we'll talk investments for a while, right? If you want to, and I'm not saying this is the best way to do it, but just as far as like going for it, if you want to make the biggest return in the market, what do? Do you pinpoint a singular stock that you understand is going to go up, right? and you invest, you go all in that stock. For example, Apple with me back in 2003 when I bought Apple at $90. Or do you diversify and spread it out across different places? You're not going to make as much money using diversification. Now, it's the safer way. It's the safer way, right? It is safe. If you're a long-term investor, I certainly think you should diversify. If you're planning for the future, retirement, all that stuff, yeah. But if you're taking it as an analogy for like following your passion and doing something you love, go 100% in. Go 100% in. Weigh the options, obviously beforehand. Do your homework. Make sure it's the right decision. Don't put yourself in a position where if it doesn't work, you're going to be homeless. But go all in. Trust your judgment. Because you would think that you wouldn't have gone for it if it didn't pass all your tests. Go all in. If it doesn't work, go back to the drawing board. Go all in again once you're ready. So you gotta go for it. You gotta go for it. If not, you're gonna be stuck. And I know it's scary to commit like that, but it's what's necessary. It's scary. I know. I've been there. But you got to go for it. If you want what's on the other side. If you want what's on the other side, got to go for it. Keith said, wife and I not happy with the returns of these bank funds and said, let's control our own returns. Yeah, safer. They're not going to, well, in bigger picture, they're not going to lose you money. But yeah, definitely if you want to make money, then you gotta do something a little bit different. Keep some in the bank, keep that safety portion in the bank, and have a little bit of a more aggressive take as well with you controlling it on your own. Keith says, I said, where do I spend money? Walmart, Disney, Microsoft, let's buy those stocks. I tell you what, that is my method of investing. That's the first question I ask myself. I don't dig through these dumb reports of bio stocks and all this stuff I don't understand. I ask myself, what am I personally using? Right? We made a call, was it a year ago now, about Nike. Nike was they came out with the Kaepernick commercial and there was this backlash, and I was like, man, I can't wait to buy some more Nike. We got a big Nike outlet here. I go there all the time. Guess what it always is? Always packed. Obviously, they're the biggest brand out there. But that was my business mentor taught me an old school way. We would drive around to locations and look. So every time I'm at a Nike store, I pay attention. How many people are in here? Huh. Business looks to be booming. Guess it's not losing popularity. Oh, I can get it at a discount now? Buy. I always start with stuff I know and stuff that I personally use. And then go on from there. Yeah, and that was one of the easiest buys I can think of. I mean, that Nike is not going anywhere, ever, ever. Disney is another one I'm really, really high on. We talked about that a few months ago. I am extremely high on Disney, and it is going to pop. Even I haven't looked at it in months, but when the public understands what's happening with Disney, it's going to pop. The public doesn't understand yet. The general public. The general public doesn't. They have no idea what's going on. They have no idea what's going on. It's going to pop. And it's undervalued in my opinion. It's massively undervalued. Yeah. Yeah. And that's simple right there. And George is like, okay, well, I love Marvel. Disney has all the Marvel. Disney streaming is coming out. Disney has theme parks they can do Marvel stuff with. It just all makes sense. It all makes sense. So, all right. So let's get started. Thanks for entertaining that conversation. let's get started on the markets again. I have no idea what's going on in the markets. I'm going to go around in my normal order. If you guys have a pair that you want to start with, or anything else that you want to start with first, let me know, and I don't mind. I don't mind kind of going over there. Avery says Euro Yen. All right, let's see if that bat pattern's filled. And then we'll do pound dollar after that. Okay, so let's do Euro Yen first. Euro Yen. Pound Yen, man. Other day. Well, congrats on the pound yen. We hit target ones on that. But again, another pair that did not get to target twos. This is deja vu. And anybody in the pound yen trade yesterday, the short, that despite Tony trying to jinx us, ended up well? Good trade, but no target twos. We need understand, if you're gonna be a pattern trader, you need those target twos to be hit at a certain rate. And at least in my opinion, or in my experience this year, let me see if I can bring my deal up real quick. Last I checked, my target ones are well outperforming my target twos. And that was okay when we were in a drawdown. I would expect that. Obviously, when you're in a losing streak, everything's going to be kind of magnified. And I am in a little bit of a drawdown recently. Where did it go? Yeah, my target, no, why is my things, all right, my thing's messed up now. Hold on, I did something. All right, what did I blow up here? Okay, yeah, so my target ones are outperforming my target twos. And that shouldn't be the case. Now, for you guys that are new, why is that a negative? This has been a tough year, yeah. It's 2014 all over again. And it's funny, this is around the same time in 2014 when I made some adjustments. Yeah, and that's something you may want to consider. There are different ways you can look at it. You can say, in 2014, I made the adjustments with pattern trades only, where I said, hey, I'm going to not take target twos with patterns because they just aren't pulling their weight. I'm going to forego the bigger target profit and just take everything off at target one, because by doing so, that would make more money than wasting it on target twos, at least until the market conditions kind of normalize. Another way you can do it, if depending on what your position size is, you don't have to go halfsies. You can say, let's say you're trading a 4 unit, right? You can say, I'm going to take 3 off at target 1 and leave 1 on for target 2. And what you can do is you can go through your data from the first half of the year, and you can see if that would have made a difference or not. So go back to your data the first half of the year and say, okay, well, if I take the same data and I take my contract 1, and instead of making that 2 and 2, I make it 3, and I make my contract 2-1, what difference does that make? And you can play around with the numbers however you want. And maybe in other conditions you could do the opposite. You can take a third off at target 1 and take 2/3 off at target 2, whatever it may be. But that's definitely another way to go after it. But yeah, it was around this time in 2014 where I made the same. It was June, because that's the end of my second quarter, where I made the same decision, where I was like, hey, this ain't cutting it. So we'll see what the review looks like. But Euro Yen on the daily. Bigger picture here. We haven't talked about this a lot because I'm not a butterfly trader. I believe this is going to be a butterfly on the daily time frame. Anybody a butterfly trader? I'm not. The rules are so vague, and philosophically, I have some issues with the pattern. Depending on how you want to trade it, there's a massive zone. But this may be one that's interesting, right? Because right above this X leg, you do have, depending on where you trade it at, that's going to make a big difference as well. 127 from there, 127 inversion, 2618. But you do have a little bit of structure up here as well. So that may be a butterfly that may be on your radar, but I don't think any of you guys trade it, so we won't spend much time talking about it. But let's go down to the 240 here on Euro Yen. Inching ever so closer to our bat pattern. We'll see that as we go down to the hourly, but just to recap, what we're coming into is a previous level of an outside return. We came down here, we basically consolidated, and we're looking for a retest of structure, right? A return to this outside return. And as we go down to our 60-minute chart here on the Euro Yen, we're going to have a bat pattern right above here. Now, what we're currently doing on the chart is, in my opinion, is not a good sign for our bat pattern. We are consolidating and now we're reversing right before the completion, which isn't a good sign, but still a valid pattern formation. Now, one thing you could do from an intraday perspective, if you're looking for a buying opportunity, as we go down to say like the 5-minute charts and the range bar charts, look for a retest of this B leg. We may see a hold there. There's some inside structure at the very top of a high momentum bullish candle. There may be a buying opportunity here, which you can trade in advance of that bat pattern. So that may give you another opportunity as well. Real quick, back to the pattern topic. Like I said, I only go target one on pattern, and the rest I do 2-1 position split. Yeah. I mean, you need movement for those target twos. That's the thing. You need movement for those target twos. I mean, I'll check the numbers. Even my, just to my knowledge, from what I remember, even my trend continuation trades haven't been extending the way that they typically do. So that's been hurting me as well, right? The bulk of your, basically, my target ones basically cover for my losses, and then target twos are kind of like money in the bank. That hasn't been happening at a high enough rate, even with my price action trades. So we shall see. All right, so bat pattern there. Again, we'll go down to the lower time frames. We can look for a potential reversal down at this 121.65 area. And again, if that happens, I think the first place to trade it to is a retest of previous structures around 121.90. If you're looking for an extension, either the bat completion at the 122 psychological number or slightly above it. I don't think there's really any point of getting slightly above it. 122.04 at previous structure looking left. Is 4 pips worth the risk of passing a psychological number? Probably not. In all honesty, right, you have a retested structure right here at 121.88. I think a question you need to ask yourself seriously is it worth going for a secondary target at 122 flat versus taking everything off at 122.88? Are those 10 extra pips worth the risk of needing price to break previous structure? That is a good question that you'll have to ask yourself. Let's go down to the 15-minute chart here. And you can see our pullback, right? You see our little bit of consolidation after this morning's move and a pullback in the structure. Some nice looking wicks down there. We'll go down to the 5, and of course we'll head to the range bar chart after that. Not going to be a little bit too shallow of a pattern. Nice double top here, or 26.18. If you look at this little miniature one as a double top as well. Nice 26.18 trade there. It wouldn't be a pattern anyway, this spike. Let's go down to a range bar chart, see if there's a different look that price can give us. And then we'll go over to, I think it was pound dollar you guys want to take a look at next. Let's go down to a 5 range, 50R. All right, so here's a look at the 5 range. And again, slightly different look, right? Very clear double top here, right? Versus, say, the 5-minute. I still think it's clear, but a little bit, you have this little consolidation beforehand, which can throw you off. So very clear double top here. Here's your inside level of structure right there. So if you're looking for that buying opportunity, see if we can hold that structure and look for a chance to retest previous structure highs. If you're looking for an opposite type of trade, say a selling opportunity, I would wait for the 26.18 and the potential move back down. Questions on Euro Yen before we head over to the cable, pound dollar? Boom, 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 boom. Nope. All right, let's head over to the pound dollar next. Again, we do have some news coming out in a little bit. Philly Fed, there's something coming out from Canada, which I forgot. But not anything too major here. All right, pound dollar. Let's start on the daily and work our way down as usual. Right, daily chart, same story, breaking close below structure, coming back up to retest previous structure. Sit down to the 240. It's the cool thing about the daily is they don't really change. They don't really change all too much. Now we did have this minor shelf right here that we violated. We thought we'd see a move into this blue line. If you remember yesterday, we did. We saw a rejection, and then the market kept on going. Then the market kept on going. Ale says I'm in an ascending channel. On pound dollar. What time frame? George says I'm waiting for a double top. 60-minute ascending channel. George is waiting for a double top in this area. Yeah. I think this is the zone to look for shorts. If you're looking for a safe place to put stops, or the safest place to put stops, I'd say above that 127.60 level. Above that 127.60 level. I'll say what would be really good if we didn't have this spike right here. I'm back on the daily now. If that spike didn't exist, what would be really good is a violation of 127.50s and a breakout move to about 128.70s. That would be a clear-cut move in my opinion if this stinker of a wick didn't exist. Because there would be nothing standing in the way of this. At minimum. Nothing. But this thing is going to throw it off a little bit. Silly markets, right? Silly markets. All right. Real quick, you can see the RSI was overbought as well. You also did that RSI swap, for those who take that into account, meaning that the RSI went directly from an oversold position at the bottom directly to an overbought position at the top. Let's go down to a 60-minute time frame, our hourly chart here on the pound dollar. And again, you can see our analysis from yesterday, waiting for the break. We had a good conversation on breakouts yesterday, if you guys remember that, right? We talked about that would be the next part of my trading. That will be the next kind of evolution in my trading once I have time to work on it. But we pinpointed this move. I mean, we called a break of this level. We found the zone of confluence. You guys remember this? 1618 and 618. Golden mean and inverse golden mean lining up. Look left, structure leaves clues. Price action came directly to that level and then retraced. I mean, it doesn't get any better than that. We always talk about finding, how making predictions are important. And many of you guys make a lot. I mean, hopefully you guys are spending time going through charts and just making random predictions. Does anybody do that? Maybe you don't do it enough. Does anybody do that? Just go through random charts and make predictions, even if it's not anything in your trading plan. You're just like, I think if this happens, then price is going to go there, right? So what you do is you take something like this, and the more you make the predictions, the more confident you get, and you start to realize that, hey, I'm pretty good at this stuff, right? And you see something like this, right? You come back the next day and you're like, oh man, I nailed it. Look at that. And the next question is just asking yourself, okay, well, now that I'm good at making this prediction, now that I'm good at seeing this type of move and kind of building that experience, that intuition where it's like when the market does this, we're likely to go there, and getting better at your predictive analysis as far as, hey, where's the best place for stop placement? Where's the best place for target placement? You do this. And the next question is just, I think it's the simplest part. It takes a lot of work, but it's, okay, well, how can I get involved? How can I get involved? And then that's the next question you ask, right? Michael sees himself doing this every day, and he's like, okay, I'm good at making this prediction. Now, how can I take advantage of it? And then that's the next part of the journey. And then you got to dig into the charts. Maybe you drop down to a lower time frame. Maybe you consider using, we talked about just using just a buy stop breakout method. And hopefully you find something that works. And if you do, it becomes part of your trading plan. And if it doesn't, then you go back to the drawing board and you find something else that works. So, nice prediction here on the hourly for pound dollar. Again, seeing a little bit of a retracement here. You're going to have a probably a double top as we go down to the 15-minute chart here. Which means if you're a 26.18 trader, you may be on alert. Maybe not a double top, actually. Maybe just some consolidation. No, you got a little double top up here, yeah. Cipher in here as well for anyone looking to get long. At least it looks like X to A, A to B, B to C. Are we? No, yeah, we didn't close above it. B to C. C to D was a bull cipher right here if you're looking to get long. Probably not a lot of pippage available, just knowing the pound dollar. 14 pips. But that could be an entry reason. Technically, that pattern isn't violated yet. We haven't passed X. Any questions on pound dollar? Keith said, when I started with patterns and when price moved further up or further down from my entry, I asked why and who's getting in because I want those returns. Now, do you mean further up within the zone or further up like past the X leg, like violating the patterns? Violation. Because we have past the D, okay? Yeah, we have, who's it? Ivan has done a lot of work on that. And a few other traders, I remember meeting him at the Traders Ball this past winter, who did a lot of work on entering very specific patterns and trying to pinpoint the reversal instead of just kind of being involved in the area, kind of pinpointing where that D was really going to end at, and then getting involved. So putting in filters such as, I don't know what they use, I'm assuming the RSI, maybe some price action stuff. But yeah, there was a whole group that was doing some pretty extensive work on that. I know Ivan was one of them because he has a YouTube channel and we talked about it a lot. All right, what pair next? So these guys said euro, yen, pound, dollar. Euro, yen, pound, dollar. Was there another one you guys named, or should we just go with the flow? Dollar, Canada. Ooh, the loonie getting loose on us, right? Pound, dollar, or dollar, Canada, loose off the goose, as they would say. Loose off the goose. So many Grey Goose stories. Most of them ended poorly. Michael says, hey, Mike, Aussie Canada is at a nice level looking left. Wait to see what happens. All right, we'll check it out. Make sure you give our traders a time frame, though, just in case they want to get there first. That way they know what to look at and know what to look for. So just say Aussie Canada on blank chart. Nice level for short, for long. That way our newer traders can look. George says, looking for double bottom on here on dollar Canada on the 240. And what we've done here on dollar Canada loonie is we've blown past structure. Kaboom. Right? We've blown past structure. Give me a second just to, I need to get my trading notes back up here. Here we go. USDC AD, you're at 49. we've blown past structure. And now we're asking ourselves the question, okay, well, we identify that price action has not technically violated structure, but I'm pretty sure we're going to violate it, right? That would allow us to make the prediction that price is likely to go lower. We're already seeing that happen. So next question is, where is price action likely to go lower to, right? And that's when we use our structure. Now, this is one of those, I like the level, but this is one of those situations where we have two different levels, right? We have a level of structure right here, and we have a level of structure right here. And this can be a tricky situation because we know that one level is more important than the other. And George is looking on Aussie Canada for a double bottom, not dollar Canada. Yeah, the lower one's going to be more important. So I do think you can look for long opportunities at this level. So when I say that, it doesn't mean that you have to avoid the first level, but it just means be aware. Now, what else can we use to kind of pinpoint maybe where inside that level we're likely to reverse at? Ooh, and you may have a cipher here on the daily as well. We can actually put that in too. Daily traders cipher on dollar Canada daily. Let's just see if that is X to A, A to B. We hit B to C. Yeah. So you get a cipher here on the daily, first and foremost. I'll get that in a little bit later. But yeah, we can use, we can look for an even handled number. We have 131, right? $1.31 even is kind of conveniently sitting right in the middle of everything. News coming out in 6 minutes. We can use a 1-to-1 measured move. Yep, we can take our swing high to swing low right here. Label this our A to B. Drag it on. AB equals CD. That's going to come down right at these lows, about 131.14s. Fibonacci's, as Keith says, right? Swing high to swing low. Fibonacci extension tool. And back up. And there's a 1414 down there. You guys know how I feel about the 1414. I don't really care about it. So not a lot of Fibonacci influence there. But you have that 1-to-1 even handle move, or 1-to-1 measured move. And you have the even handle. So a nice zone that I would take a look at is going to be between this area, 131.14s, and that 131 even handle if you're looking for a potential reversal. Yeah, you could take an inversion as well. Yeah, that's always going to be secondary for me, an inversion. For me, they're much more important when you have a 1618 inversion out of it. They're much more important when you don't have another option, but certainly something you can add for confluence, yeah, with that 1618 down there. Now, ideally, what I would like to see is that, and I'm glad we got this kind of straight directional move, because if we chopped on our way down, that would really hinder where I could look for target profits. But if we come down here and we do a nice V reversal, there's the potential move again from $1.31 back up to 132.50s. Does that make sense? And what I mean by that is sometimes, because I'm a structure-based trader, sometimes we'll see something like this, where market will come down, we'll kind of do like this, and then we'll do like that, and then it's like, and then finally get down there. Well, while all this stinking structure is being created, my profit potential gets lower and lower and lower. So without that, if we get a clean move down there, there's 150 pips potentially to the upside, assuming nothing else looks kind of funky on the lower time frame. So this is a pretty decent opportunity. Now, if you want to add confluence, if you're a CTS trader, again, you can add in that cipher pattern. Let me just load up my, I don't know why Enigma's not grabbing it, but let me load up my platform so I can actually put it into our trading idea deal. So give me a second. But remember, your decompletion on pattern formations, it is a zone. So as long as we're within that X leg, you can still count it as your 3 points. So give me 1 second here. Let me just, more than 1 second. Probably gonna be like 10 minutes because I'm gonna make a typo. I'm gonna do this and do that. Where am I going? Trading ideas. Yes, please. Pro trade log. Don't mind if I do. We're looking at USDCAD. Daily bull cipher at 132.09, and then also looking for structure longs on LTF. All right, let's take a screeny, get in here. Less risk, more reward. That's my type of combo. That is my type of combo. All right, add photos, should be good to go. Okay, perfect. All right, so let's go down to the lower time frames here. The lowers on dollar Canada here to 240. Let me just keep an eye here. This is going to be too high on euro yen. 121.75. 15. That's going to be higher high, higher close is not going to work for me on the euro yen range bar chart. I'm going to need to wait for a double bottom just because the risk reward isn't going to work. Well, depending on how the close happens. But all right, let's look at 4-hour chart here. Again, we can keep our analysis on. Here's another beautiful one-to-one move while we're at it. Look at this. How about that? Look at that. Almost perfect there on dollar can on the way down. Pretty nice. Lasted barely any pullbacks on the 5-minute as well. Yep, strong Air Force. Yep, strong Air Force. Strong and fun. Strong and fun. So yeah, I would wait till price action gets down to this level. And you're gonna have two options here depending on how you want to play this. You can tell yourself that I'm going to look for one trading opportunity, let's say at this level, and I'm going to take a risk that is a little bit safer, which is below both levels of structure. And knowing that my reward, again, depends on where you want to take targets at, but knowing that my reward is rather large in this situation, the risk reward still makes sense to go for that. Or you can take a small risk and just say that, hey, I'm going to take a shorter risk and I'll take my chances being stopped out. And if I get another chance to enter, I would enter again as well. Could be a little tricky that way, but there's both options are available. So yeah, we're just in a wait and see mode here on dollar Canada, waiting for price action to get to that level of structure. Let's go down to a 60-minute chart. You're going to see a bunch of red candles. That's what we're going to see here in the 60. Whoever told you that you have to sell as soon as the RSI goes oversold is probably in the poorhouse right now, because we went oversold right at about 132.90s and we're still going lower, right? Remember what the RSI is. It isn't a tool of reversal. It is a tool of strength. When the market goes oversold, it means that it is very strong for the sellers. When the market goes overbought, it means that it is very strong for the buyers. It doesn't mean the opposite. It doesn't mean the opposite. And you can actually implement a strategy where you use the RSI to buy and sell versus, based on its levels in the market. We talked about that a lot. It typically confuses people, so we won't go down that rabbit hole today. But for those who are interested in the RSI, if you want to dig deeper into it, you can do some amazing things with it. You can really, any indicator you can do that with. It's all about understanding what your indicator is, what it tells you, and then learning how to use it to the best of your abilities. Keep says, I have rule for zone on zone. I will take entry in the middle of both. Nice. George says, all the best things at the bottom of rabbit holes. Yeah, that's where the carrots are at. That's where the carrots are at. All right, so not much we need to look for here on the lower time frames of dollar Canada. We're just waiting for it to go lower. I don't think we'll get a range bar chart. I don't think there was any way to get involved in this move lower. This started off with news yesterday, if I'm not mistaken, right? No, it started before news. We had oil news last. No, yeah, started off with news. Yeah, 17, and then we just kept going. But let's take a look at it. Let's see. Let's see. Yeah, even on range bar charts, no way you could have caught it. Just a straight shot. No way you would have caught it. Any of these pullbacks. So, except for maybe in this area, but this is actually before. Well, no, 1400 is when FOMC came out. Yeah. So, but the conference was later. So yeah. Any questions on Canada? Last said, in hindsight, I sold at the top of the pattern and never took any targets. Yeah, that's what I'm talking about. Love hindsight trade. Never lose. All right, let's go to, what did you guys mention next? Aussie Canada. And then we'll take our first break. AUD CAD. Pair was on a tear for about a two-year stretch, and then kind of went back to doing Aussie Canada things. Just kind of the history of this pair. I've noticed that with Canada. Canada, just in general, as a currency, is very moody. It's partially euro pound, where it doesn't do anything for a while, and then it turns into dollar yen, where it just trends ridiculously. Interesting dynamic. It's hot and cold, but there's a lot of fundamental influencers of Canada as well, including the U.S., including oil. So that could be the reason. All right, Aussie Canada on the daily chart. Coming down into previous structural lows, the lowest of our lows. If you guys remember, this was another pair where we had kind of two structure levels, really three. We had this blue one right here. We have these lows right here, right below the blue one. And finally, we're testing the lowest of our lows down at the 91 cent level. So a nice even-handled number. Small pair range-wise, but there should be enough movement here for both an intraday trader and, of course, a day trader for a push higher. Now, RSI is dipping oversold again. Currently, we do still have bullish divergence, meaning that we are making lower lows on our price chart. We are currently making higher lows on our indicator, our RSI. We are at a 127 extension, it looks like. If I take a Fibonacci extension from swing high to swing low and back up, 127 extension will be down there right below that 91 cent level. 1618 inversion as well. So you may have that confluence. Again, just eyeballing it. So we'll see if it's actually there. Yep, 1618 and 127, a little bit below that structure level. Yeah, decent opportunity for a structure-based trade. Let's go down to the 240 chart. Ale says if it breaks and closes below, it could be a very good run. And I'll tell you what. Let me load up trading views so I can go to a weekly and not have to kind of expel too much data here. I'll tell you what. If from a fundamental standpoint, we'll see how much room there is to go. But that would be one that I would look for a home run trade at. I am fully bearish the Aussie from a fundamental perspective. Canada will see, but things are bad in Australia. Things are really bad, and kind of like we talked about Disney earlier, where it's like people have no idea how good Disney is. I don't think people understand how bad things are in Australia. So that could be one from a fundamental standpoint that you are just bearish the Australian dollar. And I think it was Ale who said that. Ale was right. We break below this low. This is a consolidation. This is an area of consolidation, right? We break below these lows here. I mean, 88s, 88 cent. $0.88 just as a quick prediction. Yeah. 50% retracement, 88 cent. A little bit below the 50%. Yeah, I mean there's 300 pips of downward potential. I've got to get up to date with what Canada's doing. They just had a change of heart. But Aussie's bad. So yeah, that would be interesting. That would be a very good move in my opinion. That would be. I did this with Canada a couple years ago. I wasn't able to fully take advantage of it. But that would be one where if we can find a trend continuation trade on that situation, I'd hold on for dear life. I mean, I'd take targets off, obviously, but I'd let the secondary ones run, and just look to milk that from a day trading perspective and a swing trading perspective on shorts until we get to that 88 cent level. So it's a very good opportunity, in my opinion. And I'm supposed to write down that we're talking about Aussie Canada, Akil. At about we're going to call it 105. All right. Funny how the weekly gives another perspective. Yeah, just give. I mean, when you can't see, when you're at the lowest structure on the daily, yeah, just always take a always take a bird's eye view to see what happens or see what's next. I always want to see what's next. So we're down in structure here. Let's go look at the 240. As we come into that 91 cent level. Again, this is what I don't like seeing in the market. I don't like seeing this slow kind of drag because that hurts me with potential targets. But yeah, look for longs at structure. Look for a hold of structure. Look for opportunities to get long as we come down into that 91 cent level on Canada or on Aussie Canada. Write it down. People remember when Akil called the euro. I did call it, didn't I? Those are the times where it's like we'll humble brag for a little bit, but I don't really care about being that social media guy that gets out there and reminds you guys of all the great calls I've made. But if you look back and you consistently pay attention to these trading edge videos and what we're talking about, I'm on point with a lot of these calls, especially a lot of these longer term calls. Now they take their good old time to get there. That euro took like 4 months to finally play out. But these predictions are on point. I just don't remind you guys of them because there's no point of doing that aside from just making yourself feel good, which I don't think anyone cares about. But yeah, I mean, I don't make calls very often, but when I do, you better trade them. Stay thirsty, my friends. All right. Questions on Aussie Canada? Yeah, George said, you got to find a way to get in. Yeah, it's funny on that euro call. I didn't get. I had one short. I made all my money on the longs, on the retracements, on the pullbacks. Maybe you could say that's my counter trend nature. But it was weird. That big call in the euro. Most of my money came on actually the retracements, the relief. It was the weirdest thing in the world. I made this great call where it's like, yeah, we got like 300 pips to go lower, and I'm like, I'm long. I couldn't get involved in any shorts, but I got involved in the retracements. Weirdest thing in the world. but hey, it doesn't matter. Doesn't matter. So if Aussie Canada closes in the green, would you call that a double bottom on the 60-minute, Michael? Or what time frame? Wouldn't be a double bottom for me, but whether it closes in the green or the red, if you're looking at this, it would already be a double bottom, because the double bottom would have officially formed on this red candle. So despite how the current candle closes, you can already consider this a double bottom. Now, it wouldn't be one for me because of how deep we retraced. We already pulled back to the previous structure high right here. So for me, it's more of a channel. But the double bottom was technically completed right here. So if this breaks and closes below the current candle, that would invalidate it. But technically, it's already complete. Yep. Already complete. Yep. So still an opportunity to get involved. The low was 91.19s. You can also wait for a 26.18 as well. A breakthrough of this level. Good stuff. Good stuff. All right, let's take our first break. I love that you guys are running the show and telling me what pairs to look for. We can keep that going as we go back. Euro yen's doing nothing. Look at that. The jinx of me watching it, of course. So let's put 13 minutes on the clock. We'll come back. Let me know what pairs you want to take a look at next. Again, this is all fresh for me as I did no top-down analysis this morning. And we'll continue to dig through. See you in 13. All right, guys. Got about a minute left on the countdown clock, but I'm back. I'm ready to go. So we can get started. If you're just joining us, so far we've gone through, we had a really good discussion on, I guess, kind of dream chasing this morning, you can say. We followed it up with looking at the euro yen, potential bat pattern forming there, bearish bat, the pound dollar, the dollar Canada, which is coming into an interesting level of structure, and the Aussie Canada, which is doing the same. Where would you guys like to head to next? Oh, and there's my alarm going off. The beast, pound yen. Sure, pound yen coming off of a nice Gartley pattern. Could have been a better Gartley pattern if we would have hit target twos, but life doesn't always give us what we want. We also had a good conversation about target twos as well. So let's get started on the beast here. 113. And let's see what is going on. So beast is in a very, and we can do dollar Swiss after, yep. Beast is in a very similar situation that we've been in all week. We had the break and close below structure. We are within the zone of the funky wick. We've come back up to retest structure, and we've put in a Gartley pattern, which we'll see as we go down to the lower time frames. Let me just real quick here change the slim down these candles a little bit, a little too thick. There we go. Let's make it a 4. Make it a 4. There we go. That's good. Yep. So you can see pound yen on the 240. We did come up to retest previous structure highs. We held on the initial test despite spiking higher. We then came up and retested again. We'll need to check to see if we technically have a higher high, higher close. At this specific location doesn't make all too much of a difference. But the fact is we're coming back down to retest the first retracement of those lows there. Let me just see what we have here. Our high is 137 even exactly. Our close on this red candle is 137.01. So we technically do have a higher high, higher close by a single pip before seeing price kind of come back and eat everything up. And keep in mind, we did have some news this morning. So we are seeing some related news off of that. But here on the pound yen 60-minute chart, again, you can see what price has recently been doing. Up and down, up, nice Gartley pattern, and down, up. Here's our higher high, higher close right here. And then here's the retest of structure. So if you're looking for any opportunity on this pair, it would be a buying opportunity at these lows. I don't see any reason to look for an extension. But you can definitely project a move back up to that 137 even handle as far as is where you're looking for price to go. Let's head down to the 15. Now, if you're an aggressive trader here on the 15, we had a lower low, lower close right in that level. So price came up, consolidated for a little bit, came back down. We did see the RSI swap, right? We did see the RSI go directly from overboughtness to oversoldness. We did come down and we did put in a higher high, higher close candle. Very nice looking candle right here. So this would have been your first chance entry at getting involved in the pound yen to the upside. If you want to measure out risk reward based on this, let's say you're using an ATR based stop. Our ATR is 14 here in the 15-minute chart, which is going to put us at 136.24. Will be a 1 ATR stop, looking at a risk of about this much from that close. We'll go ahead and make this red. Red for risk. And if you're looking for a move up, again, back to that 137 even handle, you're looking at a potential reward that looks like this. So pretty decent risk, more than a 1-to-1. Now, a more conservative way to get involved in this trade would be what? What would be a more conservative approach if you weren't as aggressive to take a higher high, higher close? Yep, wait for the double bottom. Yeah, so see if price can retest this level, either here on the 50 or on the 5-minute chart. Give you a double bottom, so a second hold, and that may even provide you with a better trading opportunity risk reward wise. If you're looking at it on the 5, not only is your ATR going to be a little bit smaller, down from 14 to 7, so that's going to take us up to 31 if you choose. You can always still use a 2 ATR stop, but it's most likely going to give you a better entry, again, depending on how that candle forms. That we don't know yet, but in most likelihood, you're going to have the opportunity, especially if you're dropping down to the 5-minute chart, to reduce your risk and increase your reward, which is a good combination to have. Yeah, so I'd wait for a double bottom here on pound yen. If you're aggressive, you can buy at market based on that higher high, higher close, and I think it's a pretty decent buying opportunity on the pound yen. I think it's a pretty decent buying opportunity. Any questions on pound yen? Range bar chart isn't giving us too much of a different look here. You can see it's still kind of the same thing here. If anything, maybe a smaller target projection in the range bar chart. But yeah, decent looking opportunity for a structure-based trade here on the pound yen. All right, let's go to dollar Swiss next. Haven't looked at dollar Swiss in a while, so I wonder what's going on here. USD CHF. We'll move to the 60, and then we'll move over to a daily chart. At last, we were looking at the dollar Swiss. There was I believe, a bullish bat pattern, which was violated, but I'm not sure if it was stopped out or not. I guess we'll see. But we had a few trend continuation moves to the downside. And you can see we had those 2 trend continuation moves. One was here, one was there. It looks like the bat pattern may have won. Maybe, depending on where you were stopped out at, or where your stops were at. Let's just see what it would look like. X to A, B to C, C to D. Oh, no, looks like you probably would have that probably would have been a winning trade, right? You had to roll stops. Yeah, look at that. At least target one's hit. Not bad. All right. Now, let's take a look at what else is happening. So we previously broke the X leg, violating structure. Ooh, well, technically we didn't here on the daily. This is one of those weird situations where your common sense would say that that level has been violated, but per our rules on reading price action, we've technically never had a lower low, lower close because of this candlestick wick right here. And that is a very common question I get with a lot of traders as they're going through the price action course. And I must remind them that what we're trying to do here is put rules to something that doesn't necessarily care to follow rules. So every once in a while, there's going to be an instance like this where you look at it and you're saying, Keel, the X leg was clearly violated, right? But because of that wick, we never had the lower low, lower close. That's going to extend our lowest low lower. We have yet to violate that lowest low, so technically we don't have a violation of that level. As far as trading right now, a few things you can look for. We go down to the lower time frame. If we haven't closed below this level, you could look for a buying opportunity here as a structure-based trader. Or you can look for a break and close below that level and an opportunity to continue down a little bit further to about 97.50s. We do have some minor levels in here I think you should pay attention to. 98 flat is probably a level you should have on your radar. So 98 flat and 98.50s for as far as levels that price is likely to go to next. Make sense? I have literally jinxed the euro yen, guys. It is amazing. I have literally jinxed it. All right, let's go down to the 240. 240, the 4-hour chart here on dollar Swiss. Now the 4-hour chart, we do have a lower low, lower close. So again, keep your time frames in perspective. We do not have it on the daily, but we do have it here on the 240. So if you are an aggressive trader, well, if you're an aggressive day trader, there's going to be some opportunities to get short already. If you're an aggressive swing trader, you can look for that first pullback and an opportunity to get long. For me right now, that first pullback would come to the 99-cent level. I think this little pregnant pause right in here is an excellent level to look to get short at. That's going to be teamed up with a 3D2 retracement, I believe. My eyes do not lie. Yep, 3D2 retracement right at that level. I think that's an excellent spot for a swing trader to look for a pullback to and a chance to continue lower. From a day trading perspective, there should be opportunity right now. We'll see that as we go down to the 60-minute and past that. So 60 minutes not going to give us too much here. Again, it is what it is. But once we get down to the lower time frames like the 5 and the 15, I thought it would maybe just the range bar charts then. This looks stinky. Looks stinky. Yeah. Okay. Maybe not. Price action is just pretty bad. Maybe a different look here. Okay, range bar chart smooths it out a little bit. You can't see that previous structure that we broke, but let's just pop out to the previous structure lows that we broke. Were at 98.53. Let's keep that number on our radar. 98.53. That's going to be about right here. So imagine this is the previous structure lows right here. So you can see we've already pulled back into it, which can offer, you do have a double top at that area. We've actually violated that double top, so this could be an entry reason in its own right. Two things you could look for. Obviously, if you haven't been able to get involved in this move already, perhaps we do a complex pullback where the market does a two-legged pullback into this higher level of structure, looking left right there. That's also going to be a 3D2 from our swing high to swing low here on the range bar charts. Oh, nope. a little bit below it, that same kind of level though, 90, 98, 80s, or wait for the violation of these lows and start the process over again. Violation of those lows, look for your pullback, and then look for a run down to, again, 98 even would be that first level. 97.50s would be that second level. Questions on dollar Swiss? I think it's a decent opportunity. We don't know what's going to happen on the daily, so it's not for certain because we don't have that daily close. That would be a much more powerful indicator, in my opinion, and that's why I'm calling this more of an aggressive strategy. You're anticipating a little bit more than you would if you did have that close on the daily. And look at that, a double top with no divergence. We're so used to looking for divergence, we often don't see the opportunities when there is no divergence. Lat said New Zealand, Canada breaking low as well. Took a nice short earlier, but all out now. All right, what pair next? Boom, 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 boom. We didn't do euro dollar, did we? No, I don't think so. Surprised. Usually that's the first one you guys pick. Let's look at the euro. All right, let's do euro dollar then. And again, if you guys have pairs you want to take a look at, just let me know. We can continue doing that way. But let's see. Let's do the euro dollar. Euro dollar here on the daily. Big green candle. Making our way up towards previous structure resistance, our next stopping point. As expected. Let's go down to the 240. You can see we came up to the 113 even handle here on euro. Spiked past it and started trading kind of back below. Again, overall, I don't have a we're not at much of an interesting place for me at all in the euro. Really no interest in thinking we're more likely to go short versus long here or vice versa. So I'd like to see us run into that structure level and see how we react there. We have had a lot of bullish candles in a row, so you would think that some relief is in store, but really just not at an interesting location. And dollar Swiss looking to break those lows, so that reset may be in store. Let's go over to the 60. 60 on euro dollar. Yep. 15 on euro dollar. Any questions on euro dollar? That's the reason no one wants to take a look at it. Well, maybe a cipher here on the 5. It'll be like 4 pips, but potential. Oh, nope. I think we just miss it. Yeah, check that 382. I think we just missed it. It's gonna be a small one anyway. It doesn't really make a difference, but. Yeah. All right. Did pound dollar, did euro yen, did pound yen. Let's go dollar yen. Keeps has nice low zone on the 15, 113.11. Lat says Aussie dollar head and shoulders. We can do Aussie dollar. Let me just show you Keith's area. Remember, guys, hey, look, if you're typing stuff in and you want our traders to understand, you have to give them a time frame. And here's Keith's looking at 113.11s, this area right here. There. All right, Latch says Aussie dollar head and shoulders. Let's go to Aussie dollar next. Looking left, structure leaves clues. Looking left, structure leaves clues. Aussie dollar here on the daily. Another big bullish day, another big bullish candle. Again, you can see we had the lower low, lower close. Now we are retracing back up. Aussie is one of those pairs where we could go lower or we could not. And if we go lower, we don't necessarily know where we're likely to go lower to. So it isn't a trend continuation type of setup, just with a lot of uncertainty. What is certain is if we continue up, our next level of previous structure resistance is going to be up here around 70 cents. So as a trader looking to get short, looking to trade structure, I should say, this would be your next structure trading level. Sit down to the 240. You can see the beautiful head and shoulders that we looked at earlier in the week playing out nicely, rallying up. And again, the next level that we're likely to rally to is a retest of this consolidation up here. So one thing you can look for a move in anticipation of this move. You can look for some type of pullback and in anticipation of the market going higher here on the Aussie dollar. Heading down to the 60. And heading down to the 15. Nice pullback here into that neckline, actually. Any questions on Aussie? You guys got to get better at giving me pairs. You started off with a bang. Euro yen was interesting. Pound dollar, dollar Canada, Aussie Canada. And then we got the pound yen and dollar Swiss has been interesting, but euro dollar, I chose that one. Aussie dollar. This is when we've ran out of steam, isn't it? George is like, I told you, nothing. All right, let's do a quick run through then, see if anything pops up on the radar we can discuss here. Look at that. Dollar yen broke structure to the downside yesterday. That could be interesting. We've been stuck in this channel with dollar yen for a minute, and then you realize where we're actually trading at, and it's not interesting anymore. Latch said, we try. Yes, well, welcome to my job, Latch. All right, so we broke consolidation to the downside here on dollar yen, but then you kind of remember where dollar yen is trading at. Similar situation as Aussie dollar. Let's just kind of zoom in and see if there's anything we can make from this. I don't think there is, but I do want to find something that's useful for you guys. Potential advanced pattern formation on the 60, I believe. We head down here to the 60 on dollar yen. We do have a potential advanced pattern formation. USD JPY. USD JPY. Yep. You can see after our 1-to-1 measured move down, we may have two patterns actually. We have swing high to swing low, X to A to B, B to C, C to D for a potential bat pattern here on the yen. Looking at about 22 pips of potential profit. Probably a little easier seen on the 15-minute chart as well. Could have a potential cipher too. Let's see where that 1, 4, and 4 is at. Nope, not going to be a potential cipher. So you look here on the 15-minute. Dollar yen, not a bad pattern setting up. So you got that going for you. Last said pound Canada, loads of structure stacked on top though. Again, Latch, you gotta give us a time frame. Give our traders a time frame. We're not gonna know where to look at on pound Canada. All of them. So the 1 minute. The 1 minute chart. The 1 minute chart. All right, let me get this into our chat real quick. Then we'll head over to pound Canada and look at all of the time frames on pound Canada. Let's go to pound Canada. Pound Canada on the daily. Coming down into multiple levels of structure. We're at current structure here, current structure there, current structure down there as well at 166. And then we have some a little bit lower as well. Let's go down to the 240. You can see price action making a move into one of those structure levels here on the 240. Big red candle. Down at the 167 even handle. Heading down to the 60-minute. Same thing, you see the market is starting to stall off. If you're looking for a buying opportunity at this level, you can look for a move back up to 167.60s. Again, just got to be cautious with the stops. You got about 6 or 7 structure levels laying on top of each other, about 4 or 5 structure levels laying on top of each other. So you want to be careful and just either with your stop placement, maybe you want to do a bigger stop because of that, or you just need to accept that, hey, I may have a stop loss that isn't necessarily in a safe place. And as long as you're comfortable with it and comfortable taking the chance, then that's doable. Looks like you just missed the double bottom here on the 5-minute. Just missed the double bottom. But yeah, not a bad level of structure, or not a, well, it's multiple levels of structure obviously, but not a, if you're looking to take a few different shots, this would be your first chance. On pound Canada, that would be your first chance. We did get a break on dollar Swiss here on the range bar chart, so trend traders, keep an eye out on that. You did get a break here on dollar Swiss. Now it's time to reload, look for that pullback and any opportunity to get short. That's going to be a decent, again, it's not as solid as it would be if we had the daily close, but that's a decent trend continuation opportunity with room down to, what was it, 98s we talked about? room down to 98s. All right, let me just scroll through some things here, not on the weekly Akil. See what Kiwi's doing. And see if there's anything that is worth going over for you guys. Nope, higher high, higher close. Euro Canada holding a previous level of structure here to Euro Canada. You take a look at the 4 hours. Just bump out to the daily real quick on Euro Canada. Well, not the greatest level of structure now that we get some perspective. Let's say we're holding a previous structure low right here, so it could look for a short-term structure-based trade. What makes it hard is we just broke a level of structure. So there's not all too much room to move there, maybe about 25 pips or so. But perhaps if you're a lower time frame trader, 5-minute trader. Nope, that's just going to make things worse. I take that back. I was going to say you can look for a move back to this structure shelf here, but it's the market's just not going to give an opportunity for that. So we'll throw that one away. Euro, Kiwi, Aussie yen, Canada yen, New Zealand yen, Aussie, New Zealand. New Zealand. If you're a structure-based trader, this can be a decent level to look for structure shorts here. Here in Aussie, New Zealand. A retest of these previous highs. Could end up seeing a head and shoulders off of that as well. Again, a very, very good rejection candle on the daily. So we could end up seeing a move up here, kind of a little bit of a retracement back down, which would offer a good counter trend trading opportunity. But then also a break of that neckline would offer a good long opportunity as well. So Aussie New Zealand, something that could be worth keeping an eye on. We just did pound Canada. Oil, here we go. Another one that was very similar to pound yen, right? Looking for that breakout in oil. Looks like there was an advanced pattern formation there as well. But looking for the breakout of those highs in oil up to our next level of structure. Right in this area right here. 4-hour chart. Looks like it was a busted pattern. Did not work. What you can look for here is kind of what our arrows are doing, but to a shorter degree. A retracement. Right, a pullback and then next leg up. A pullback anywhere between, I would say, 54.78 and about 53.50s, right? So the previous highs right here, and then the lows of this little consolidation. That'll be a decent place to look for a pullback to with oil, and then looking for a move back up to previous structure highs, that red box you see in there, that $57 level. Gold next. We saw a big break on gold after yesterday's news. We finally broken above that consolidation level. Right, a little bit of a breakout of our ascending triangle here on the weekly. Now, the one concern with gold is we do have higher highs, right? Look on the weekly chart, we have highs that are right here, which are being flirted with right now. We have highs that are right here, which are also being flirted with right now. That's what the market is finding resistance. And then we have some highs looking left. So although it looks like a breakout, right? Looks and smells like a breakout, we're not necessarily out of that danger zone. So it would be tough for me to look for any type of trend continuation just knowing that in the background. You can still look for it, right? But just understand that we do still have more resistance that needs to be broken through. That we still are in zones of previous structure resistance. Silver following suit. I need to check the quotes on that, actually. That'd be a good idea, Keel. All right. Dollar index coming back down. Dollars. All right. Any other pairs you guys want to take a look at? Started off with a bang, ended with a fizz. Still a quality day in my opinion, though. 145 perhaps. Yeah. Raymond says Euro Aussie. Sure. What can I help you with on the Euro Aussie, Raymond? I know we're still in the giant wick. Yep, Raymond's referring to, if we zoom out to the daily, the big wick looking left. All right. I love how you guys in London had little things on the street crossing that says "Look left." Makes me feel happy as a trader. But it looks like we broke structure lower. If we get a 3-point move, would you look for a move lower? I would not. I don't see us as breaking. Well, what time for the 240? So I would say this first and foremost. Looking on the daily. So here's what I see. Here's our last move up. Here's our last move down, our outside return. Here's our move back up. I honestly wouldn't have any. This would be the move that we have to make in order for me to have a bearish bias, this previous outside return. We look on the 240. Let's see how that changes perspective. And it doesn't really. But I can see what you're looking at, and you're looking at this move right here. Let me know if I'm wrong. And then this, and then technically this isn't going to be a violation either, because we wicked below, but we didn't close below that wick. But I can certainly see what you're looking for, something like this. That still wouldn't give me interest in any type of low, any type of short from a swing trading perspective. Maybe from a day trading perspective. You go down to a lower time frame, but it still wouldn't make it wouldn't make me bearish from a swing trading perspective. But I could see if we take out these lows here and you go down to like a 15 or a 5-minute chart and you're looking for a daily move or intraday move, and you're looking for kind of a move down to, I guess this level is where your projection would be. I can see that being a trading opportunity for sure. Yeah, just nothing higher time frame for me. We're just still at a level where we've broken above these highs. I wouldn't be interested in anything shorter long term. But yeah, from a day trading perspective, yeah. It'd be a nice little rotation and trend. It keeps on board. So like going down to a 15, for example. Going down to a 15. Ooh, we'll get this thing around. And then looking for these to be taken out. Yeah, you can certainly make the case for that. Yep. And it's one of those things where it's like, in my opinion, like the trend hasn't changed. The overall trend has not changed at all. But what you're doing is you're playing the micro trend. So if this is technically a pullback on the higher time frame, you're taking a trend continuation move, which basically represents the pullback. So you're taking a short-term trending move within a long trend relief, which is perfectly fine. And that's kind of what we're going to cover in the Foundation Course 2.0, where it's looking at trend based on your perspective and not being kind of one answer for what the trend is. Dennis says, so on the daily, we can be bullish, but having a pullback on a lower time frame, we can be bearish. Yes, all the time. Yep. So you can have something like this where, if I just delete this chart, right? So if we're boom, and we just did a Q&A on this as well, right? So you would obviously say that we're in a bullish trend here. Do you guys agree? This yellow line, right? We have extensions, retracement, extensions, right? What comes after extensions? Retracement, right? So in a healthy trend, we would see something like this, right? And then a continuation up. Well, in a lower time frame, right? This move right here can easily be this, right? And what would you guys qualify this as? A bearish trend, right? The arrow move I just drew in, right? A bearish trend. Would you guys agree? You have your 3-point moves. There's some hesitation. You guys don't agree. So the answer is yes. This is a bearish trend. But the point is, this can easily be within this. Just as in this bullish trend could easily be a retracement within a bigger bearish trend. So yeah, you can certainly have a short-term trend and be a short-term trend continuation trader within the relief of a bearish trend, or the opposite trend, I should say, a bullish trend. Yep, happens all the time. In fact, I would argue that it happens on the majority of the trades we take, because we just never know the full perspective. I mean, how many of you guys go out and look at the monthly? There are probably plenty of times where you're taking a trend continuation trade on a 4-hour time frame where it's in the opposite direction of the monthly. So it's part of trading, called fractals. But yeah, yep, that can certainly happen. And again, that was one of my goals, is to kind of just get rid of this idea of trend versus counter trend, because I just think it confuses people a lot, especially as they start bouncing around different time frames. And that comes from my experience in coaching. So yep, you can certainly have that. Certainly. Any other questions, guys? Disney, double topping. Double top on Disney. So. Going once, going twice. Ooh, I see one person typing. I don't know why I'm so hungry already. This trading stuff messes up my eating cycle. I mean, I eat all the time, no matter what. But my lunch is at like most people's breakfast time. It's like 10:30. I'm like, lunchtime? Like, I didn't eat breakfast yet. All right, I'll get this up to you guys as always. Should be in a few hours. I will see you guys Monday in the Q&A. I'll have a weekend trading edge video. I'll try not to make it as long as last time. And I'm sorry. Last time it ended up being about almost an hour. I apologize for that. I'll try to make it shorter. But you guys have a great weekend. I'll be on the platform. If you're interested in trading dollar Swiss, keep an eye on it. That's the one for today. All right, take care.